Hi, this is Dave Zegel. Today let's talk about cash out refinances, and this is particularly for real estate investors. A cash out refinance allows you to take advantage of the equity you've built up in your investment real estate. Why is this used? Why would you want to take cash out of something you've been paying off over time or maybe paid cash for initially? What happens is when you've built up equity in that piece of real estate, that's great because you built up the value and you don't have much or if anything to pay it off anymore. That's not necessarily a bad thing. However, a lot of your personal value is now built up in an asset that is not liquid generally. Any real estate tends to take some time to sell, and even then you're hoping that it's a good market to sell to get the most value out of it. So one strategy that we often see when you've paid off a piece of property or again paid for it in cash in the first place is to take a cash out refinance, meaning use the value of that property to then take cash and do one of two things. You can either purchase additional real estate, so if you're doing really well in real estate, whether it's just renting or renting homes or renting land or even fixing and flipping, all that's a little bit more short term. You're not going to do necessarily cash out refinance, but if you're successful in that to where you could use some cash to then further that business, that would be another good reason to do a cash out refinance of existing property. So take that cash, grow your real estate business even more rather than having sit in an illiquid asset in real estate. Another reason to potentially do a cash out refinance is to actually diversify away from real estate. So maybe you've gotten to the point where you've built up a significant holdings of various real estate properties and you're saying, well, this is great, but if the real estate market crashes or something awful happens, I've got everything tied up in real estate. And this is where we look at diversification. Just like we would look at diversification in a stock market, you don't necessarily want to have all of your investments or all your value built up in one class of assets. So if all of your value is tied up in real estate, it might be a good time to think about diversifying out of real estate a little bit. And I know from experience that a lot of real estate investors get into real estate because they don't necessarily trust something like the stock market. But I do have to remind those of you that feel that way that the real estate market has risk as well. So it's not necessarily an either or, one's risky, one's not. They're definitely different types of risks. But one thing to consider is if you are far along in your real estate investing especially, it might be well worth it to take some of that out and put it in other investments. It doesn't necessarily have to be stocks. It can be bonds. It can be a lot of different things. But investing in something other than real estate, that way, if there is a period of time where real estate is not solid as an investment, let's say the real estate market is just taking a hit like it did many years ago, you have other investments and other things that you can pull money from that may not be tied to real estate directly, that might hold their value well. So as you've become successful in investing in real estate, that's awesome. You can either take a cash out refinance to invest in more real estate, or in some cases it might make sense to diversify away from real estate and give yourself a little bit more security long term. So cash out refinances, they can be done through many different avenues. We're not going to go into all of those, but just something to consider if you've gone down the path of paying off a lot of your investment property, or again, not paid anything in debt in the first place, you just paid all cash. It might be well worth considering doing a cash out refinance to see what could you do with that cash, not necessarily in a risky fashion if you don't want to, but what else could you do to actually just better yourself from a cash flow and a risk perspective long term. If you have questions on that, definitely reach out to me. I'd be happy to help, or you can leave a comment below. Thank you.